Committee, Monday, November 17th, 2025. Could you please call the roll?
Alder DePoon.
Here.
Alder Wood.
Here.
Mayor Moore.
Here. Do I have a motion to approve the minutes of November 3rd?
So moved.
Second.
And I have a second. Any changes, corrections, additions to the minutes of November?
Nope.
No.
Hearing none, all those in favor say aye.
Aye.
Minutes are approved. We have no appearances. We have no unfinished business. Under new business.
He'll be back.
I
He left
guess.
Apparently.
his wife brought his computer up.
Oh, there we go.
Number 6A, consideration of resolution 25-11-2846, authorizing the issuance and sale of 3.9 million general obligation refunding bonds, series 2025B.
Start us off.
Yeah, just one little thing here. The actual issuance amounts, I sent the revised resolution out today. It's for $3,640,000 would be the revised amount based on today's, when they went out to the bond market. So there's three borrowings here. This first one, Jeff, if you want to come up here. Jeff Galangi from Hutchinson, our financial advisor. The first one is related to St. Damiano. I think we talked about before, we borrowed this short term. We're using cash on hand to reduce the borrowing too. We used $2 million that was given to us from the county. And the bond was, the short-term note was up early 2026, so we had to do it here in 2025.
Yeah, I think it was first January or first February coming due, so we decided to do all three issues, at this particular time. We discussed that earlier in the year when we did your normal CIP borrowing, that we would be coming back to you in October or November on these three particular issues. Mark's exactly right. We've downsized the par amount of the issue. It's a refunding. Buyers wanted to pay in some heavy premiums, so we paid all the expenses, and plus we delivered a net premium of $236,475. Therefore, we are able to reduce the par amount from the 3.9 that you needed. You can see on that, actually the two sides of the page here, we've got the general obligation refunding bonds and the taxable issue on the front side with the revenue bonds on the back side. But again, you'll see that there's a small deposit to the debt service fund, and as we said, we've dropped the par amount from 3.9 to 3.6. We'll be delivering to you the full amount, so that you have in fact $5,903,475. All that being said and done, you can take a look at, again, this is green space. I think Mark had mentioned that. It was the property that we had an opportunity to buy in a hurry, and we did so, pledging $2 million that we collected to reduce that, which was certainly our intention when we originally went into that note. And again, you can see the yields in 26 or 2.80%, and 270, a little bit of inversion there, 270 for 1, 2, 3 times 269, and then it starts to increase a bit. But even out in 2043, we're still under 4%, a 399 yield. All of that taken into account, paying all of the issuance costs, etc. We have at the day of closing what we call a true interest cost of 4.125% for that 18-year issue. Wasn't long ago, in the last couple of years, we weren't getting that for 10-year issues. So market is improving, rates are coming down, I think, as you know. You certainly know it from the feds and their actions the last couple of committee meetings. I think it'll continue to work that way a little bit, but we've had some stabilization in the markets. Flip side of that, though, is we're not quite making quite as much. We're starting to see some of that slip on our reinvestment side. We still got good reinvestment rates, but not the 5% that we had a year and a half ago.
just one quick thing too, if you look at the rates, we also have a callable date in there, I believe it's 2034 or 33.
I think this one's, we moved it up for you, Mark, it's 2031, I believe.
So if, the rates even go lower, or something like that, we'll be watching that if we need to refinance it.
Yeah, you've got that flexibility, so we originally, I think, had it at 34, we moved it up without hurting to 2031.
31.
So I think it says in the resolved clause, it refers to the mature December 3rd of 2035, subject to redemption December 1, 2034.
Oh, okay, it is 34. I apologize.
So, yeah.
34.
Unless it got changed, and then
No,
then this needs to be.
Was that the original?
No, it was later, we moved up to 34, I thought, so.
We moved it to 34. I apologize. I knew we moved it up.
Yeah.
And 31, a 6-year call, 5-year call, that'd be pretty quick. We'd pay some punishment, I think, from the buyers. I
Yeah.
apologize. It just
Yeah.
should know better that, just by looking at that issue. So 34, so you've got all the maturities 35 and out that are callable at your discretion. In whole or in part, $5,000 amounts, so. And you can start whittling, obviously, that away on the 399s. Anyway, all said and done, I think you guys did a nice job in terms of securing that property and not putting into a long-term, it's in your debt service levy, so.
Do I have a motion?
I will move approval.
Second.
I have a second. Assuming this is
Roll call.
roll call.
Excuse me, Alder Wood,
Aye.
Alder Zapula.
Aye.
Motion carries. That takes us to 6B, consideration of resolution 2511-2847, authorizing the issuance and sale of 1.55 million of taxable general obligation refunding bonds, series 2025C. Mark or Jeff?
Thank you, Mayor. This is a TID related, right, Mark? This is the one.
Yeah, just so everybody knows, this is the one where we talked about last time. TID 8, it's donor just TID 9, it's just kind of a strategy to take to get more money into the TID 9.
Yeah, we're taking advantage of our donor-recipient relationship that we have with our TIDs, and as you guys know, we went into all of our TIDs expecting them to pay for themselves. Ultimately, they are. These are not general fund or general fund tax levies. These are pure increments from our tax incremental district. It has cash flow. And basically, all we did is we flipped that $1.5 million over to allow us to collect another 3 years, basically, of TID revenues. Perfectly smart in terms of taking advantage of that option. So these are taxable, as you can see. The yields are the coupons, so there's no way to generate production because buyers are really looking for a coupon that's the face value of the security that they buy. So they're buying a par bond, not a premium or a discount. So, and those are 405s, 415, 420, and a 445 in year 33. Those are really geared. They're all primarily geared off wherever the Treasury are, some relationship to the U.S. Treasuries. The 5-year Treasury was at a 371 today. So when you look at our 405 in the 5th year, we're basically 35 basis points off the federal government's ability to print money. Not too bad, really. And it kind of follows down the line as you go for our 4 maturities there.
And this one actually is, you can redeem it in 2031.
That's the one that's 331, okay.
Okay.
Thank you, Doug. I thought I wasn't paying attention there. I knew we had one that was 31.
Well, it actually works pretty good, because
Yeah, basically, they're almost all callable, but, and again, if we have TID incremental revenues that suffice, we'll certainly pay off the long ones first. That could very well be based on the way our cash flows look on the TIDs.
Yeah, so basically what's gonna happen, those first couple of years where there's the zero numbers, that's where we're donating. So we'll have enough cash flow, so it's one of those things we can look
Most of the
at.
money, or the majority of the money is going to the other
Yeah.
issue.
So like the last 3 years, we'll probably look at, we could probably almost refinance or pay them all off, when we're able to. The
Good
last
news,
two or-
yeah. Good news.
Unless something dramatic happens.
Any other questions on this one? Do I have a motion?
I'll move to approve.
Second.
Okay. Please call the roll.
Alder DePula.
Aye.
Alder Wood.
Aye.
Motion is approved. Takes us to 6C, consideration of resolution 25-112848, authorizing the issuance and sale of 4.6 million water system and sewer system revenue bonds, series 2025D. Jeff?
Yeah, this is just two short-term notes we took in utilities. And now we set the repayment schedules to be paid off at the same time, so we can go into a longer-term note, revenue bond.
Yeah, it stays within our methodology in terms of financing our utility, our enterprise system. As Mark said, we had a couple of bond anticipation notes that we put in place to get projects done. There's no sense in going and doing a long-term revenue bond for $1,150,000. You're better off to do one at $4.3 million if you can accumulate over time some shorter-term notes, which we did. Not only are we refunding 2 notes that are already been expended in terms of its proceeds for improvements to our utility, we're including some new monies, and it looks like with premiums and stuff, you've got as much as $1,773,162, Mark, in which to spend. I know you said you needed about $1,650,000, but with premiums and stuff, instead of shortening the issue, in the way these costs of these monies look, should you decide to I think, correct me if I'm wrong, Mark, you said there might be a little bit of sewer work to be done. That wasn't much, but.
No, we were looking at it.
So anyway, if there's any monies left over after the project's done, you either spend it on additional projects or you use it to pay debt service. That being said, I'm more impressed really with our A-plus revenue bonds. When you look at our true interest costs out to 2039, come in under 4%, all costs included. So I like the fact that we didn't do note anticipation notes again, that we have an issue size that's large enough to take out and garner some real interest from buyers. And we certainly had that.
Just one quick thing on those short-term notes. It's not like we're just paying interest, we're also paying premiums, or principal at the same time.
Right.
So it's still like taking a long-term note, we're paying the principal. So I don't think people think, well, we took the short-term note, we're just paying interest. We're paying
Yeah,
both
no,
at the same time. So we're paying stuff debt down.
right. You've
And
got
then-
existing debt service in those years, and what we do is, Mark said, what you're not seeing here without the official statement is this issue doesn't stand by itself. There's other debt we're paying for, and we blended this one in here on the longer term so that your total annual payments are level. So that when you're looking at your rate structure for users, you don't have any big jumps and valleys, and we can consistently live on the net revenues that your current rates, user rates, are generating. Makes sense too?
Technically, bands don't count against that calculation at the time.
What's that?
The bands don't count against the calculation.
No, you're absolutely right.
That's
Bands
kind of
do
the
not-
other-
That's correct.
The other
Bond
advantage to do
anticipations
it.
do not count in that calculation, which is another reason, that's an excellent point, which is another reason historically we might look at doing bans, is to say, wait a minute, we don't want to go for a rate increase, we just had one. Let's get it up and running, let's figure out what our O&M is going to be, what our net revenues are going to be based on the most recent rate increase, and then structure a debt issue that lives within those cash flows.
And so with this one, are we expecting this one to go to 39?
It should, yeah, this one.
I
Usually
would
revenue
expect-
bonds do.
Mayor, I would expect it.
Yeah.
Utilities are just typical that way. We don't aggressively, you know, we do aggressively pay off debt, but our watermark is our net revenues.
Yep.
So what I normally do is we'll look at the utility, we'll see the last audited financial statement, has there been any rate increases that are gonna change those net revenues, take that calculation, and then look at some coverage ratio. And we're over 2 times coverage, so you got really good cash flows, which says to me, this debt service structure is not likely to put a lot of stress on our rates. It's more likely to come from your operation and maintenance costs than anything else.
So just to go back for a second, the San Damiano one you said is done in 34?
This one, I think,
Well, it's done in,
was,
done in 43, but we can start calling and start in
Calling in 34.
34.
And the TIF one is, start calling what?
we can start calling that in 31,
31, okay. Just-
if the increment's there for those.
Okay. Any other questions on the sewer? So, one,
Nope.
I'll take a motion.
Motion to approve.
Second.
And then second. Could you please call the roll?
Alderwood,
Aye.
Alder Japula.
Aye.
Thank you.
thank you.
Thanks, Jeff.
Thanks, Jeff. That takes us to item D, consideration of resolution 25-2844, adopting the 2026 operating budget and establishing a tax levy.
I would move that we forward this to the city council without recommendation.
Second.
Any other discussion about that? Okay. All those in favor say aye.
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 Motion carries. That takes us to acceptance of general fund accounts, Mark.
Yeah, kind of page 76, just kind of walk through. There's not a lot of stuff, just ordinary business. There's going to be a lot of rec stuff in here, a lot of festival stuff for the special events in the rec department. Just page 78, J.M. Brennan. Just that's a lot of, you see a lot of library maintenance, pot repairs, so hopefully all that stuff is going to be fixed with the 2026 capital budget. Got the bottom there, KSW, the construction, that's the Public Works Garage. I think they're working on the punch list, so everything's kind of wrapping up. Very next page is our Lake Ridge Bank, that's our credit card system. Page 81, again, Strand, they're working on the Nichols Road and the library HVAC. I'm getting close to, the goal is to, just was talking to Jeff here quick, we want to kind of borrow here, we just talked to him kind of early in the year next year, so the goal is to get, we already talked about this with Dan and Brad to get, not so much the Nichols Road, but the library HVAC, get that bid out fairly soon, and same with Tony Watha, so we can have those numbers before we borrow early next year. Page 82, actually Burleson, kind of stuff that their attorney is working on. There's a lot of TIF development agreements they've been working on for us. Barnes right underneath that, so the fourth quarter pickup, so that is done for the year. Page 83, the B-cycle. We do get donations to offset all that cost. Page 88, if you're looking at MG&E, this is 2 months worth of data here, just the timing of it. So it's 2 months worth of bills. And that's all I have. If you have any questions or concerns.
Any questions? Yeah.
I was looking at the 1125, well, the largest expense for the Kalahari. Is that a conference?
You talk about the Lake Ridge Bank stuff.
Yeah.
I assume that's a conference, Kalahari, the one. Where's that one at? I'm trying to see where it's coded to. 205. It would have been for an EMS type conference.
Okay.
So we're sending 2 people to the active conference.
Gotcha.
Any other questions? Do I have a motion to accept?
Motion to accept bills.
Second.
And second. All those in favor say aye.
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 Checks are approved. Any staff updates?
I do not.
Do I have a motion to adjourn?
Move to adjourn.
Second.
All those in favor say aye.
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 We are adjourned.